And we've got a panel, Wall Street versus Crypto, fighting back or embracing new opportunities. Your moderator is Mike Butcher. Please welcome Mike Butcher, editor-at-large at TechCrunch, who was also awarded an MBE in the Queen's Birthday Honors List 2016. Please.
Which one do I sit at? This one? I'll go over here.
Please welcome Rich Gupta, CEO at Regulated Transactions at TitanDX, an SEC FINRA compliant exchange. Please welcome Alex Mashinsky, serial entrepreneur, venture investor, tech innovator, founder of the Celsius Network. Please welcome Anatoly Radchenko, co-founder of United Traders, an investment company that raised $35 million during crowd sales in 2017. Please welcome Jason Bloomberg, Forbes contributor, best-selling author, top 5 digital transformation influencer of 2018. Hey, Jason. Please welcome David Bleznak, Decentralized exchange expert who founded the Totle to make crypto investing mainstream. Now I'm going to let the panel get started. I'll see you later.
Well, I don't know. You have an MC and they do all the introductions, and then what does the moderator get to do? I don't know. Crazy. Well, now we've had some introductions. Let's start right at the end and have everyone talk about a little bit, just for a minute or so, quickly, what you're working on, so everybody's more au fait with the actualité, as we like to say in London. Go ahead, David.
So they did the introductions, and now you want us to talk about ourselves, too. That's
Absolutely.
Okay. I'm David. I'm the CEO and founder of Totle. We're building an abstract layer on decentralized exchanges. We have a live product that we launched in June, allows people to easily manage their crypto assets they have in their possession, in their wallet, and utilize decentralized exchanges to make trades and balance their portfolios. So you can check out our live product at totle.com, Totle.com.
Hi, I'm Jason Bloomberg. I'm president of Intellix, an industry analyst firm focused on digital transformation. I'm also a contributor to Forbes. I've been writing about blockchain and cryptocurrency now for about 4 years from the skeptical position. So I'm the curmudgeon that wants to poke holes in all the nonsense, and I'm looking for my Forbes article for the gems that aren't nonsense in the sea of noise. So if you have one of those gems, I want to talk to you.
Hello guys, my name is Anatoly. I'm from Moscow. I'm a full-time trader. I started trading 12 years ago on Wall Street in the proprietary trading firm, and I switched to crypto in 2013. But you know, like our company is working for 9 years and is trying to rethinking about how the liquidity works on the crypto space, because you know, like every cycle, everything that's happened on our planet, it's already been. So the evolution of how the exchanges and how the trading on crypto space is working, it should go on the laws of traditional markets.
Good morning, Rich Gupta. I'm CEO for TitanDX. Prior to TitanDX, spent 20+ years in different Wall Street firms. So we're going to have a time to talk about those. As well as TitanDX is a centralized trading exchange. We are focused today mostly on OTC side and trying to add value in the crypto market as a whole and on the blockchain.
Alex Mashinsky, I'm the founder of Celsius Network. We finished $52 million ICO about 4 months ago. Our app is available, it's live. You can do 2 things. One, earn interest on crypto, which really nobody pays you. Right now we're paying 5.5% on Bitcoin, for example. And you can get a dollar loan against your holdings. So you don't have to pay taxes, you can defer them, and so on. Before this, I did 7 startups as a founder, raised over $1 billion, had $3 billion in exits. And I'm trying to use Celsius to bring the next 100 million people into crypto, because I think that's our biggest problem.
Whoa. He'll be signing autographs later, okay? Just form an orderly queue for Fahrenheit. Guys, what are we doing right now? Everyone's very familiar, of course, in this room, and of course, many people are really highly expert in crypto trading. But Wall Street is, and we're all familiar with how Wall Street operates. When are the two worlds going to merge? Who would like to have a go? Go, David. You need.
Yeah, so I think that you're already seeing the worlds kind of merge in a sense that maybe not from a technical level or from an implementation of blockchains directly into Wall Street and trading, but you are seeing a brain drain. You're seeing a lot of the top Wall Street firms lose human capital to crypto companies. I think that that's a pretty explicit merging or clashing of the two. The two groups, two phases here of the development of our financial institutions. So I think as people realize the benefits, especially the younger participants who realize the value of the human capital, of their knowledge, and as they see the value of the technology, it'll be I think it's a long-term battle. I think it's over the next 50 years. We see this slowly.
That's quite long term.
Yeah.
50 years.
Yeah, I think it's a 50-year battle.
Rich, you're an experienced in Wall Street. What do you think from your perspective?
I think merging is happening as we speak, right before us. A blockchain is being.
Could you hold the mic a little closer?
Blockchain is being added on to predominantly all the back office and front office functions. You can read all about Deloitte & Touche has done papers, PwC has done papers, JP Morgan is in front of it. So when the trade settles today, it automatically goes through when you buy an IBM share or equity share. We don't see after that. Today, what we see on Bitcoin or Ethereum trading, if you want to buy a big lot, big size, not small percent, yeah, a small percent you can go to any exchange and trade and no problem. It settles, comes into your exchange wallet account, and you're happy. But behind that, if you want to trade sizable quantity, in crypto market today is a huge lack, and we're trying to build that in the back end. As far as Wall Street is concerned, some massive changes are going through as we speak, and people are adopting to that, especially the blockchain side of it. And the trading element will come into play.
What sort of massive changes?
Mostly on the settlement side and mostly on the back end side. So today, if you buy a stock, perfect example, it takes about 3 days to settle it. And there's a lot of back and forth between different houses, between people who own the stock, transferring. It's still a book entry, but it takes 3 days. Shall we do that on nanosecond? Shall we do that in 1 hour? Yes, with the blockchain technology, that could be improved.
Go ahead.
I just did a keynote on Wall Street. There were about 250 compliance officers from all the different major banks, and asked them how many people here hold a coin. Not a single hand went up. Okay, so until these people actually interact with the technology and so on, you're not going to have any progress.
Isn't that because they're afraid of compliance, regulation, the SEC knocking on their door? That's not because they're not technically competent, surely.
No, of course, yeah, it's not a technical problem. It's a question of when, right? Every JP Morgan, I met with their team. They have like over 100 people on crypto, right? In all the different parts of the bank, watching it and making sure that they jump in just at the right time. But my point is, all those people have not jumped in yet. If they did, Bitcoin would be at 50,000 because there's just not enough Bitcoins to supply all of these guys on Wall Street. So the issue is just they would love for it to die, but if they see that it's sustainable, then they would all love to jump in and be part of it, right? So right now we're getting closer to that step where enough banks are saying, okay, I'm in. Like Fidelity, State Street, these guys are already in behind the scenes, but the big guys, JP Morgan, Chase, all those guys.
What's going to make them jump, though?
What's going to make them jump? Custody, solving all the custody issues, and fraud prevention. I mean, right now they don't feel like they can comfortably hold assets as a custodian for themselves or for third parties.
Jason.
So I think there's really two separate questions here. One is whether or not Wall Street firms will be leveraging blockchain technology. And in the context of permissioned, centralized blockchain, there are clear advantages to improving settlement times and other technical advantages. That is a very different question from the question of cryptocurrency, which is generally permissionless and decentralized. And I think on that side, yes, there are reasons why traders will want to trade cryptocurrency as a speculative asset class, but I think there's a real time bomb there. And the time bomb is the fact that permissionlessness allows criminals to be miners. And as organized crime becomes more prevalent within the context of cryptocurrency, essentially now cryptocurrency becomes an arm of organized crime. That's a time bomb that Wall Street is afraid of, and perhaps why the compliance officers are so skittish, is that increasingly people are realizing that cryptocurrency is an arm of organized crime, and of course once that becomes broadly known, then all permissionless cryptocurrency essentially will have to be separated from the permissioned centralized part, which is really the only part of cryptocurrency that will survive long term.
You're right, but the dollar is the #1 criminal activity on the planet is with the dollar. So I mean, sitting here telling us about crypto. So you have to jump through hoops to use crypto.
No, that's the most common fallacy, right? Let's say you're stopped for speeding, for going 75 miles an hour in a 55 mile an hour zone.
There's more dollars in Russia in circulation than in the United States.
And you tell the cop, I should be let off for speeding because somebody else was also speeding. That is a fallacy. The fallacy is that it's okay for cryptocurrency to be used for criminal use because criminals use fiat currency. That is a fallacy, right? That does not hold water, and if you hear that, you should run the other direction.
We had a woman here from
David's got a point.
I have a comment on that. Yeah. So there's two separate. I see that as two separate issues. I just wrote a blog post about this actually last week on our Medium, that the whole importance of money being touched by criminals or funds or whatever you want to call it, cryptocurrencies, U.S. dollar. It's the importance of fungibility. I mean, if your U.S. dollar is used by a criminal and you go to Starbucks to use that dollar, you're going to know it's worth $1. Whether a drug dealer touched it or someone else touched it. Similar with Bitcoin, we need to keep a core component is fungibility, is trusting that Bitcoin is going to be worth a Bitcoin no matter who it comes from and who we're sending it to. So you have a couple different issues there. So I don't really see criminals are criminals. I don't see comparing the U.S. dollar or comparing using of Bitcoin. That's just what those criminals choose to use. So stealing is wrong. Everybody knows that. We don't need more laws to.
Isn't the point here though that to print the U.S. dollar requires quite a lot of effort, but to mine coin, you get a lot of free electricity in Georgia, and you can do it.
No,
and that can be anybody.
The point is that only the U.S. government can mint the U.S. dollar, and that anyone can create a cryptocurrency or create a protectable asset that they can distribute.
Sure, but I think that's kind of what the criticism is. What do you think?
I ran 2 public companies on NASDAQ, right? And so I sat at the top of the pyramid several times. I got paid millions of dollars to do this. But Ethereum created more millionaires than any public company in history. Ethereum created more millionaires than any public company in history. What does that tell you? That this is a system that allows the average Joe to get
in the absence of regulation, let's be honest.
No, but this is with the regulation. Ethereum, what do you think? Ethereum is not regulated? It's regulated in every country. The SEC came out and said Ethereum is legal. It is not a security.
Recently.
By saying that they are regulating it, by saying that they're saying it's okay to use Ethereum, it's okay to use Bitcoin. So the job of the government is not to tell us what's right or wrong. The job of the people is to tell the government what's right and what's wrong. And here the government is just following our wishes. If we want to use, look, I have 6 kids at home. If my kids, they don't want anything to do with the dollar or the $22 trillion in debt that we're about to hand off to them. They're like, you keep that, we're going to take our own currency and take it from there.
I can see the argument for that. Rich?
Well, Alex has a good following here, and I like the cheering. But Jason raised a good point of illegal activity, compliance. There's a reason why Wall Street is so successful. Have decades and decades of rules and regulations, have compliance. We need that. We don't have that today. I'm not so sure about SEC coming on tomorrow, about the ICOs or ITOs or whatever. The cryptocurrency market as a whole is a wild, wild west.
Rich, what do you think has happened, though? Do you think that all these rules, we have all these rules, they kept everything in place, we had a complete collapse of the system that you are saying is so secure, so good, all these rules
that's called market participants.
No, it
market
works great
activity
for
happens,
the people at the
and
top
the
of
rules,
the pyramid.
All these rules, all
doesn't
they do
work
is
for the
they
average
create a
Joe.
separation of wealth.
Well,
all
they
they've
did.
done is they've created a in and an out. So all
Let's
these
talk
regulations and licenses and all this stuff, it creates a very small group of people that can participate and a very large group of people who cannot participate.
I beg to
and this is a
differ.
new
I mean,
system
look,
that levels that
I beg
playing
to
field.
differ on that point.
Sure. I think it's so in this sun-lit up plans of the future, where we all become millionaires. How is going to let's talk about the protection, consumer protection, and also what are the checks and balances that are going to be put in to allow getting back to the subject, to allow the crypto to be at the level of Wall Street or at shall we say being as mass market as possible with all the right checks and balances. What are those best checks and balances?
And I think it is the ease of use. There was a comment made down here that it's not that people aren't technically savvy enough in order to use this stuff. I think that is a barrier, and that's one of the things we're working on at Totle, is making interfaces extremely easy to use so people can trade directly from their wallet. And I mean, look at this conference, for example. We're all still going and registering plastic tickets. I don't even know where mine is. I mean, I wish we had some sort of like public ledger that could administrate that whole thing very easily and quickly. We're not even using it, and we're the proponents of it. So until the people who really understand this technology are using it every single day, then they're not going to be able to show the benefits to the people who are yet to accept it at this point.
It's going to take time. Everything takes time. It's not going to switch a button, everything's happened. We need rules and regulations. We need compliance. We need people to authenticate transactions and trade on. As much you may agree or disagree with the regulations and rules, we need them to protect those little guys we try to help.
You mean to make sure that they're not allowed to invest, right?
Well, no, everybody is supposed to invest. I mean, look at the pension funds. Look at the 401k plan.
does a great job to make sure that the retail investor is the last in line.
Absolutely not. That's the only thing they try to protect.
Come on.
Absolutely not.
I'm an accredited investor, and I can tell you, like,
so am I.
So no, but the point is that we are in a private club.
It's
right?
not.
And
it's
only
not.
after
I mean,
it goes
look,
public.
Alex, we can debate this.
Let me finish.
Yeah,
for a
sure,
second.
go ahead.
Only after Facebook was worth $200 billion, the retail guy got to get in. That's the whole point. So here, there's a tsunami of innovation that for the first time in history did not start on Wall Street, did not start with the VCs or the institutional guys. And the people all over the world are saying, here is 17.
I'm for it.
Here is
but I talk about I'm for
let me
it.
finish for a second.
I'm for it. Wait. You're going on to that topic.
No, I'm trying
but
to
I want to make
a
point is that compliance is needed.
For the first time in 700 years, right? The average Joe can participate, be there before. I have an employee who did not even know that he participated in Ethereum. He was in the pre-sale. He just found his stuff. He's worth a few $1 million. Now he's calling me and bitching me out because,
He didn't make enough, but
okay.
it's okay.
So, no, yet he made too much. That's the point, that he would never have a chance to participate in Facebook. My point is that there's a tsunami of innovation that has to do with the public blockchain, to your point. It's not about the private blockchain. And here, the rules are different. Wall Street is not part of the rules. Wall Street is not invited. The VCs, we did not raise $1. We raised $52 million, not $1 from any VC. If I'm trying to build a community, why would I take money from VCs? My 7 companies were all VC-backed. In each one of them, I ended up with less than 5% of the company.
I think
why?
This is
They're masters at squeezing you out and putting the profits in their own pocket.
This is a...
You and I can definitely talk on the sideline. We can spend as much time, and I can convince you that we all want the same thing, every little guy to participate. Nobody's stopping them. What stops them to participate
sure that there's going
is
to
illegal
be,
activity.
I'm sure.
We need to control.
If you're a U.S. citizen and you're not accredited, can you buy into an ICO?
Right, I'm sure there's going
Not
to
today.
be
The answer is no.
debates.
So what are we talking about?
Guys, okay.
It's
I'm sure. please, go ahead.
It's clear that there are a number of people who believe in the libertarian ideal of cryptocurrency in this audience, right? Where if we had no government involvement whatsoever, then we'd be all free to do whatever we wanted. The problem is that without proper regulation, governmental regulation, then the libertarian ideal just becomes a front for criminal activity. And it's happened time and again. It's happened time and again. Right, it has happened with distributed network technologies.
When Enron or WorldCom goes bust and $200 billion disappear, that's criminal activity.
We have the time bomb of mining being dominated by criminals. Then what was the number one form of cyber attack in 2017? It was ransomware. Only reason ransomware was ever feasible for the hackers was because of cryptocurrency. 2018. Ransomware is number 2. What's number 1? Cryptojacking. Cryptojacking is the number 1 way that hackers are attacking big companies. So, and of course, cryptojacking is all about money. So we have tools for the criminals that give money to the criminals, and it's inadvertent because we have this wonderful community of libertarian-minded thinkers who think that if we free ourselves from regulation, it'll be for the public good. It's not.
Now, I think we've covered that very well, that subject. Now let's just do a little bit on the subject of the panel, and then we'll throw it out. Guys, I'm sure you got some questions, yeah? So we'll have some questions shortly. What I'd like to do now is just to pull us back a little bit. Let's talk about timelines, okay? So timelines. Is it the case that crypto trading in a Wall Street fashion by institutions is going to happen in the next, what are you going to call it? 2 years, 5 years, 10 years? And then what does that look like? Let's have a little bit of a talk about that. We've done the criminal stuff. We've done the mining stuff. Now let's talk about what happens when it actually does become a legitimate exercise, perhaps with the, I mean, when I say legitimate, what I mean is fully accepted, gone mainstream, the whole works, right? Go, David.
So I don't think it fully really happens until the whole concept. I think it's still, the way the question's worded is still trying to pigeonhole our economy into this system where institutions have to run things, and so that's the issue there. Generally the question is, when are the institutions going to accept this? Well, the point of the technology was to reduce the power that institutions have in our miniature economies, in our microeconomies, in our general economy. So when it's fully embraced, the system's going to look completely different. Shared economies like Uber and Airbnb are going to be administrated by, softwares that are immutable on the ledger. So there's not really a way for, I don't think personally, to answer it where, okay, institutions are now going to accept it and crypto is going to be mainstream, because if that's the case, it changes what that looks like.
Right, yeah, that's a good point. So there's this philosophical argument about, whether or not it's an institution. The institution becomes a software, and of course there is some talk about services like Uber and Lyft and Airbnb effectively just becoming
that's not the purpose.
Blockchain
That's
driven.
not the purpose of public blockchain. Is to fix Uber or Airbnb. I mean, look, I view it in 3 steps. You have the that's not read Satoshi's paper. He's writing about replacing the financial system. He's basically saying the existing system will never be fixed. It doesn't matter how much regulation you apply to it. These guys flip a coin, it always falls on top.
So when does it get replaced?
So, crypto is the replacement. So
yes, but when?
But the point is, you don't need the institution.
What's the timeline?
You do not need the big institutions to do that.
When does it
Today,
fit then?
Every exchange I talk to, every exchange tells me that they have record signs up of new people opening new accounts. Right? So while the coins are going down crazy, the tide is rising all the time, right? I mean, talk to Coinbase. Coinbase has more accounts than Fidelity, right? Robinhood has more accounts than E-Trade. So what we have is huge manipulation that is, we think that the prices are going down, but in reality, the tide is rising. And like Warren Buffett said, sooner or later, you're going to find out that all these guys are shorting. Have been swimming naked.
Aren't you worried about market manipulation? Sovereign wealth funds are about to come into this space?
To your question, that's the first wave, is the retail, and that's all we need to care about. The second wave is family offices. I do see family offices doing a lot of OTC trades. They're buying 10, 20,000 BTC at a time, and they're basically trying to put 2 to 5% of their assets into this class because they believe that there's a lot of value here. And the big guys, institutional guys, look, Jamie Dimon is gonna rest in peace, and he's still not gonna believe in Bitcoin. Okay, we don't need to convince him. You know, that's not the point. But when you have J.P. Morgan, Citibank, and Bank of America block all U.S. citizens from using their credit cards to buy crypto, and at the same time they copy Ethereum, call it something else, and run to everybody and say, "Hey, here's blockchain. We invented it." Right? I mean, that is not cool. You know.
Institutions are already participating at different level. So if you break down the institution, Alex talked about family offices. You can talk about family offices. You can talk about pension funds. You can talk about insurance companies. Those are the big bucks. Why they have not arrived? Big bucks haven't arrived because one thing which you don't want to hear it, especially the front row, the regulatory impairment. Till we have you ask about the question when, I would say between 2 to 3 years, if not 5 years, you will have regulatory clarity from SEC, CFTC, Federal Reserve, you name it. Without that clarity, institutions are not coming. We can't blame the banks. Banks are just the participants. Banks are nothing but following the environment of regulatory
You can't blame them
impairments and
for
whatnot.
2008 either, right?
Well, no, you don't. I can have a dialogue on that one-on-one and explain
all
to
the
you.
money the banks have came from us, from
look,
all of us.
Absolutely.
We don't need the banks or the institution. We take all of our money, we put it into crypto. Those guys just go out of business.
Create a regulatory environment that will happen. Till that happens,
we don't need that environment.
Well,
we just need to withdraw our 401k and put it into
what
crypto.
Jason talked about of illegal activity going on. Alex, I hear your passion. I like passionate people, but without regulatory clarity,
so I have 6 kids.
These things are not going to move.
Alex, what's your answer to the middle income guy who puts all his money into crypto, and then one day he walks into the Venetian, someone hacks his wallet, and he loses everything? What's your answer?
I'm not saying all, but I can tell you that every major bank this month got hacked by Russian guys. Every major bank. Do you hear about it? I mean, so saying somehow that not a single crypto blockchain got cracked in the last 10 years. So talking about, yeah, if I lose my card and I put my PIN number on the card so I can remember it, and somebody else goes and withdraw cash, yeah, that's silly. Same thing with a wallet. If you don't know what you're doing,
lots of average people do that kind of thing.
I understand. So my point is that all this money,
not tech people.
My point is that all this money that we talk about institutions and all this guy, that's not the institution's money. It's our money that we gave to the institution. So if we withdraw it, all the power for the banks, all their power comes from us making monthly deposits. We take that check and put it somewhere else. Now, the funny thing is that our kids figured it out. We just didn't. You know, our kids know it. I was in Korea. 90% of Koreans in Seoul, 90% of them hold cryptocurrencies. You know, so they figured it out.
Right. Great. I think actually we could do some Q&A, shall we?
Well, I'd like to answer that. I'd like to answer that question.
I think there's a microphone that we can throw around. Where are the organizers?
Yeah, well, I'd like to answer that question about.
Go ahead. Yeah, please.
I think the question of when.
I've got you guys. Don't worry.
It's not a question of cryptocurrency versus Wall Street or cryptocurrency versus the banks. I think it's a question of cryptocurrency versus the governments that issue fiat currency. And I think the challenge there is one of seigniorage. So how many people here know what seigniorage is? Oh, really? Well, this is a word you should know. Seigniorage is the difference between the face value of a piece of fiat and the amount of money it takes for the government to create that fiat. So let's say a $100 bill takes 25 cents to print. I know, something like that. Well, the difference, $99.75, is the seigniorage. Who gets that money? Well, the U.S. government. They can take a piece of paper and people believe it's worth $100. And it costs them 25 cents to make that piece of paper. And they pocket that difference. Governments, it's huge for the governments. Imagine how much money the U.S. currency, seigniorage, goes into the pocket of the U.S. government. And every government with a tradable currency, so not the third world, but the euro and all of Japan, the Japanese yen, et cetera, have seigniorage that gives them huge advantage. The question is, will they ever give it up willingly? Well, obviously no. Right, there's no reason. So then the next question is, well, is there any way the crypto community can take that from them, right? Because Bitcoin and the other cryptocurrencies do not have seigniorage, right? Nobody is pocketing any money because of the difference between there's the amount you get for mining it, but other than that, there is no.
You got 10 seconds.
Uh,
transaction.
Okay, right. Go.
All right,
So
so
it just won't, it's just, I don't see it.
Seniority, let's talk about
governments
that. This is
giving
a
it up.
$20 trillion bill from Zimbabwe. Zimbabwe used to be one of the top currencies in Africa 20 years ago, okay? Them and South Africa, two top. You want a
And there's
$20 trillion
seigniorage. There's no
Zimbabwe?
seigniorage there,
No, it
right?
costs nothing.
It's worth
Let's
it.
hear.
This used to be a dollar
let's hear
for
from
dollar.
the audience. I think
That's
you've
what's
heard
going to
enough
happen
from
to
us.
the US
Right.
dollar,
Go
okay?
with it.
If we keep printing them and thinking
you guys need
nothing's going to happen.
excuse me, chaps. You need to hold it quite close to your mouth.
Yes, sir, I know. Hello.
Go.
Thanks, nice to meet you again.
Who are you?
My name is Austin Lewis. We beat you guys in cricket all the time. I'm from the Caribbean originally.
Oh, thank you. What's your question?
My question is this, and I'm going to start with it. I took, I built a model, and there was $1 million put into the model.
What's your question?
The question was that, can I just say what I'm going to say, please? So I took $1 million as a, as a model, wasn't real, and I put it into the stock market with Wall Street and everything. And that money was optioned out. At the end of 20 years, there was zero left because what I made in the appreciated value, the brokers optioned out all the money profit I made in fees throughout the entire cycle. So the point is that, to me, crypto is giving a bit of equilibrium to the whole market that a lot of the bankers are not comfortable with.
Do you have a question?
Yes. My question would be is this: why is the industry so afraid of something that's going to give equilibrium between the fiat system and the crypto system? Why are you so afraid of it?
Can you pass the microphone to that? Yeah.
Those who are afraid of it have the power right now and are the ones receiving those fees. So there's nothing wrong with the new system. Now I will respond with that one last thing there is that nothing's free, so there still has to be, if it's a more equitable system, you can spread those fees out among a group of people, but there has to be some administration for that.
Okay, question?
Hi, my name is Bleznak, and I actually spent 7 years at Goldman Sachs working on the asset-backed securities. So the question to you is that what is so fundamental about regulations that you say that cannot be put into those smart contracts? For example, I was working on the ABS. ABS, asset-backed securities, have many, many layers, lawyers, contracts, prospectuses, SEC, Federal Reserve, everyone, between people who pay mortgages and those investors. But all of that can be put into the smart contracts. All of that could be made transparent without need of the regulation.
Okay, anyone want to go with that?
I got that.
Yeah.
Exactly that is happening right now. What I mentioned before, Deloitte & Touche has come up with a paper, and back in industry as a whole, Wall Street is not afraid, the banks are not afraid to get involved in crypto, from the earlier question as well. They are involved only if the regulatory impairment gets cleared up. If we don't have any regulation, it's naive to think we're not going to have regulations. But to answer your question, yes, asset-backed securities are being debated and talked about to put everything on a blockchain. That's exactly right.
Okay, question there?
All right, in talking about regulations, or even as an independent company, what's being done to mitigate or minimize or completely end any kind of environmental impact that's going into these blockchain mining locations? Because we're able to mine in places like Georgia where electricity is free, but who's getting that money?
Corrupt.
Yeah, who's getting that money, and how is that not a block to third world countries that don't have access to electricity?
Good question. Anyone?
I think most of the participants in crypto markets are very generous, and they are donating part of their income. Is there an environmental agency who can manage that and do it? I'm not a proponent of this, but I'm definitely a proponent of folks who are participating in this environment to donate some money for charitable giving.
The environmental impact is a huge issue because right now 2% of all the carbon emission in the world has to do with the blockchain mining, right? So we are definitely not helping with that. So I think all of us moving to proof of stake and other solutions is the future. We cannot do proof of work forever, and everybody, the smartest minds in crypto are working on that.
Yeah, question here?
All right, seigniorage is synonymous with gross profits. The cost of goods sold is the cost of the dollar bill. It also exists in Bitcoin and all the other cryptocurrencies because it costs the nodes, the miners, to actually generate that next reward. So it does exist in cryptocurrency. The question I have is, why are you so caught up on the government as we know it today issuing the regulations instead of having for both, or maybe all three. A free market, a reputation system where the people decide what people's credit and what safe really is, grants the door for the rest of the population to go towards.
Well, I think the key difference is the criminal element. As I said before, so I don't want to repeat myself, but here's another thing to keep in mind, right? That yes, the intrinsic value of Bitcoin is the amount of money it takes to mine the Bitcoin. And if the price of Bitcoin drops to a certain point, then you would think it would no longer be economically feasible for anyone to mine Bitcoin if they have an electricity cost. Well, so why would anybody continue to mine Bitcoin if they lose money on the electricity? Well, either they're stealing the electricity, so they're criminals for that, or they have enough benefit of being able to process the transactions even though they're losing money on the transaction processing. The only organizations that can do that are the organized criminals who are leveraging cryptocurrency for nefarious ends. It actually works against the process as long as
we're going to have to, I think we're running out of time for questions. Go ahead. What, sorry? Yeah, just 1 second, sir. Go ahead.
Thanks, Mike. Andrew Rosso. I'm a 28-year-old internet attorney, millennial. What advice, we're talking about Wall Street, we're talking about investments, what advice do you have for people our age that are getting into this and may come across some of these scams? What things do we need to be looking out for coming into this stuff?
Yeah, personally, I've invested in several ICOs, especially 14, 15 months ago, and I think that there's a level of responsibility that's on the investor. I mean, doing your own due diligence is important, and investing how much you're willing to lose at first, and figuring it out for yourself. So I don't think this isn't brain surgery. You'll be able to figure out if there's a scam very, very quickly. I would say my advice to young people who are trying to get involved in this space is just to buy as much Bitcoin as they can stomach at this point.
Okay, we're really running out of time. I'm going to let you guys just do two questions, one after the other, okay? So you do your question, then you pass it to her, she does her question, and then we're done. Okay, go for it.
How you guys doing? My name's Yedidai. I had a quick question about the Zimbabwe bill that you picked up. Now, my question is, how will cryptocurrency be affected once the RV happen? Because it seems like most fiat currency are going to be back-based by the minerals of the country. That makes sense, like gold, silver.
How's it all going to be backed up? Right, okay, madam?
Yes, hello, my name is Kendra Wood, and my question is about the derivation of your logical reasoning in the label of all crypto users and all crypto miners as criminal. The reason I ask this question is because all electrical impulses are going through a system that can be monitored not only electrically, but also through data packets that are going through a centralized server. HSBC laundered Mexican cartel money with dirty, filthy money, cash. So how do you explain the deaths of my people in Western Kansas with your dirty money cash?
Yeah, so I'll answer the Zimbabwe thing.
Well done.
I support the second answer. It speaks for itself. I don't need to answer that. But most countries in Africa, their currencies are backed by the commodity that country has. So South African is mostly diamonds and gold and so on and so on. But in the United States, the US dollar and the value of the dollar has to do with the profitability of the corporate system, the ability of the US corporations to produce more profit than anyone in history, right? Apple is the most profitable company in history. So the problem that we have is that behind every US dollar, right, there's every person here, anyone who's a US citizen, owes $165,000 to foreigners, right? And what we're saying to ourselves is, hey, we can make so much profit that we can just pay that interest anytime. And that's what happened to the Roman Empire, and that's what happened to the Byzantine Empire, and that's what happened to every empire in history, all right? They printed a currency, and that currency devalued because they couldn't pay their bills because the debt just completely decimated them. So that's what we're facing here right now. And no one is taking responsibility. Our political system is not here to fix the problem, right? And all of us have to take action. And like Satoshi said, you cannot fix it by electing people or by replacing Wall Street. You have to create a whole new system.
Well, on that note, ladies and gentlemen, goodbye Wall Street, hello crypto. There we go. Thank you very much. Please thank our panelists.
Thank you to all of our panelists for Wall Street versus crypto, fighting back or embracing new opportunities.